right, here's your intro.
DWOGL HD3 Philadelphia. An Odyssey station. Investor Schooling Live with Phil Falcone and Larry Steinhaus on Talk.
It was really nice. It was great. I was talking
Why would
about,
they call it the real estate hackers?
Well, I think it was a weird name, to be honest with you. It wasn't a great thing, but there was some people I met there. As a matter of fact, there was some guy that I met there who is actually teaching something that we teach. We teach trusts. Mm-hmm. And interestingly enough, I just noticed he called already.
He did.
Say, hey, Randy, what's going on, man? Randy, are you there?
Yes, sir.
What's going on, Randy? So we teach trust at Investor Schooling, and you are, what do you call yourself, Mr. Land Trust? Is that right?
Mr. Land Trust.
Mr. Yes, Land Trust. So you teach people the same thing we teach people, which is how to buy things in trust. And we were talking about this yesterday at the Hackers event when I did my presentation on Subject 2. I was talking about how you should buy. But you're at the presentation now, aren't you? I mean, you're at the Hackers event right now, aren't you?
I'm still there right now. Yep.
I can hear all the noise in the background. So since you're the genius on trust, although Phil and I know everything about trust, of course, right, Phil?
We certainly think we know everything. If Mr. Land Trust can teach us something we don't know, that would be cool.
So tell me a little bit about why somebody should have a trust.
Well, especially real estate investors should, because it's kind of an oxymoron that the more successful you become in the real estate business, the greater target you are for a frivolous lawsuit. Contingency fee lawyers and their clients perceive real estate investors as an easy target because they have hard assets that can't be vacated or sold off real quick, so they can sue them and get paid. And I don't know if you've ever noticed this, Larry, but lawyers don't sue poor people, and there's a reason why. It's because they like to be paid, and they know that it's hard to unload a 50-unit apartment building quickly if you're trying to avoid paying a judgment. Now, having said that, I want your listeners to understand, we don't teach people to use land trusts to take advantage of anybody or not pay their responsibilities in life. If you
right. So what you're saying,
you should pay.
So what you're saying is, if somebody accidentally screws up, the land trust will protect them. And what I mean by accidentally is, something crazy happens that we had no control out of. I'm not saying that, we intentionally burn our house down and somebody dies, then we should all go to jail. But if something bad happens and maybe the insurance wasn't enough to cover it, the trust holds the property separate from any other assets, correct?
That's true, and each asset should go in a separate trust. But if you've got a minute, let me tell you a real-life story that brings this point home. I sold a house back in the year 2000 that my wife and two daughters and I lived in. 6 months after closing, I got a letter from the buyer's lawyer saying that the buyer had to replace an air conditioner, all the toilets in the house, and some wood flooring. And if I would just send them a check for $8,000, they wouldn't sue me. Well, Larry, I'm not a real smart guy, but it seems to me that I shouldn't be responsible for maintenance on a house after I sell it.
Yeah, right.
And so this is just intimidation. These lawyers send out these letters intimidating people. Most people will pay, but I wrote him a letter back and I said, look, I wasn't the owner. I don't know who the owner was. And he wrote me a letter back and said, well, if you tell us who the owner was, we won't sue you.
Yeah,
and I sent him a letter back and said, I don't know who the owner was. It was a trust.
Yeah, right, exactly. Right.
And
So the trust, is the trust, right. So the trustee of the trust, you have full control over the trust, and the beneficiary of the trust is the person you have who you're holding the trust for. And in this case, the beneficiary could be anybody. It could have been you. It could have been me. It could have been Phil. It could have been Rockefeller. It could have been Trump. It could have been anybody, right? And also the trust. Most of the trusts.
Yeah.
Right, and it could be an LLC. Exactly right, and that's what I do. I make my beneficiaries usually an LLC. So that's awesome. So hey, real quick, we're gonna get on with the show, but real quick, Randy, you have some kind of weirdo program that you have to, right, about trust?
Yeah, I have a home study course that I sell to real estate investors to teach them how to do this, and provides all the forms, all the knowledge, and I give them personal support. and they'll create trust the rest of their life at no additional cost once they get my home study course.
So real quick, before we hang up with you, what's your website?
It is Land Trust with an S, it's plural. Land Trust Made Simple.com.
So
Land Trust Made Simple.com.
But the website isn't simple. I get it. Hey, Randy, it was good to talk to you, man. It was good to meet you yesterday.
There's a lot of,
What, good?
yeah, nice meeting you. Nice
and
meeting
take
you,
care, man.
Larry, and you call me anytime.
You got it, man. We'll talk again. Thanks, buddy. All right, so that was part of what I did yesterday at the Real Estate Hackers event. I met Randy. It was funny that he called just now, and I met Randy, and I thought Randy he definitely knew what he's talking about. And you and I, we talk to people about trust who say they know trust, and they have no idea. A lot of times we'll talk to estate planning attorneys, and they have no idea what we're doing. And I questioned him about a couple of things. He knew the answers. I was like, this guy knows his stuff. And he actually studied under somebody that we studied under, who is kind of old right now, Jack Shea.
Well, that's kind of where it came from.
Yeah, we call him the grandfather of trust, right, Jack Shea?
I've never heard him called that, but maybe some local people do.
Yeah.
I mean, I met Jack. I believe. I met Jack Shea at Jack Miller's house.
Okay. Wow.
Right. Remember, I told you that Jack Miller, when he passed, he left his house to the real estate group to be used for real estate meetings, and I met Jack Shea there doing a presentation on trust once.
That's great. So if you guys are listening, you need to understand that everyone has a mentor, and we have our mentors, and these are the people who taught us what we know, and we're passing that information down at Investor Schooling. And by the way, if you want to call in 855-939-1137, if you have any questions about trust, if you have any questions about LLCs, if you have any questions about real estate, stock options, anything at all, 855-939-1137, and we'd be glad to take your call.
All right, so you want to get into some of these topics?
Let's do it.
Let's dive in.
All right.
What is the easiest way to earn in the stock market?
The easiest way to earn in the stock market? Be a stockbroker and sell suckers bad stocks.
No,
I know that's not what you were asking, but I just wanted to be funny.
Answer I'm looking for.
Right? It wasn't funny?
You wouldn't want anybody to think you're a con artist now, would you?
Well, I'm not being a con artist. If I was selling stocks, I would be, but I'm not.
So think about the question. Where do you think I'm going with this?
You're going to covered calls.
That's what I'm thinking.
I know that's what you're doing. I just thought I'd mess with you a little bit.
So why don't you tell people a little bit about covered calls?
So covered calls is actually the safest way to ever invest in the stock market. If you want to make a little bit of extra money. So, for example, you buy a stock. Let's say you buy a perfect example is Apple, because I think Apple's a great covered call right now. I think it's selling right around 133. I have to look. I'll be looking at it later anyway. It's selling right around 133. You buy 100 contracts. 100 shares of Apple at 133, and then you sell the covered call right around the same price, maybe a 134 covered call. Meanwhile, you get, I don't know, a couple $100, maybe $100, $150 for the week. So some people refer to it as renting the stock out, and you get $150. And if the stock goes over 134, the stock gets bought from you. If not, you get to keep the stock, and then you get to do it again. But if the stock gets bought from you, it got bought from you. You already made $135. It gets bought from you at 134, which means you made another $100. And it's a really simple way to make money and not have any risk. There's one place where people get upset, like let's say the stock goes up 10 points and you sold it for 2 points more, but so what? That's rare. And the other one is if you have a stock that's a volatile stock, like let's say the stock goes down to 80 for some strange reason, you're stuck in the stock until it comes back. But at the same time, you would have had that stock anyway, you would have kept it anyway, and you'd be at 80 anyway. So it's not really a loss, it's just that you can't sell the covered call for a little while. It's actually a really great way to safely invest in stock options.
Well, I would agree with everything you said, but I really think it's the easiest way to earn in the stock market. I don't know that I agree it's the safest, because when you're selling covered calls, you are holding the stock over a period of time.
Right.
And if the stock does tank during that period, not that I think Apple is in grave danger of tanking.
Not at all.
But, it's one of the most profitable companies that's ever existed on the planet. So I have a lot of faith.
And then why is the stock still at 133?
Well, that's a question I wish I could answer.
Can't figure that out either.
This has been going on for numerous earnings
Yes.
periods now,
Yes.
and it doesn't seem to want to move. It's very unusual.
Yeah, I actually tell people if you want to invest in the stock market, just buy a stock, buy as much Apple as you can, and just put it in a drawer and forget about it. Same with Facebook. Even at 330, 340, even at this point, it's a great. It's just you stick it in the drawer and you forget about it. But Apple is the better play of the two at this point.
I would think it's probably the strongest stock in the entire stock market.
Agreed.
Would you think that? Yeah.
Yeah, I agree.
You know, and it makes you wonder sometimes. I mean, you know, we trade options and we're always looking to maximize the amount of money that we make. But in times like these, maybe throwing $100 grand in Apple and just letting it sit
Yeah,
there
sure.
might be a pretty smart move.
Yeah, it might be because the stock market is behaving very oddly lately. You and I are both saying the same thing, both experiencing it. It's behaving oddly, where stocks that are supposed to move don't, and stocks that aren't supposed to move are moving. I mean, you know, you could blame the Reddit people, but there's something else going on, and it just doesn't make as much sense as it should be.
I don't know how much of the Reddit thing scares me. As a matter of fact, I've played with some of those meme stocks and I've done okay.
Have you? Okay.
Yeah, I've lost money on some. I made money
Right.
on others. I mean, it's kind of fun when you know that they're in play and they're very volatile.
Right.
It gives you, it creates an opportunity.
Yeah, my problem with that, the options are too expensive because they are so volatile that the options are way too expensive, and you can't. You know, the odds of making your money back if the play goes bad is very thin, and that's why I don't like them.
Okay. So, why don't we go to the next question?
Sure,
In this crazy market, we're talking about the real estate market.
I knew
here.
that. Yes,
Should you be selling or buying houses?
I love this question. This is such a great question because the question is asked another way, and it's always asked this way: if the prices are going up all the time and everything's overvalued, maybe I shouldn't buy real estate, or should I buy real estate now? And the answer is absolutely, you should buy real estate now. Now, should you be selling? That's a different question. But let's talk about buying. Buying, you should be buying always. The thing that you need to do is learn how to find a good deal and identify what a good deal is. It doesn't matter what the price of the house is. What matters is that if you're going to, for example, you're going to buy and hold and rent it, the rent is the most important piece. If you're going to overpay for a house, who cares? If you're going to overpay for a house and it's going to cost you $1,000 a month as a payment, and you're making $1,500 a month in rent, who cares if you're overpaid for the house? It doesn't matter. You're holding on to it. You're making $500 a month, which is the goal for me. My goal is to have as many rental properties as I can, because when I go into my retirement or if something happens to me, I know that I'm going to get paid for the rest of my life without a problem from rental properties. That's my goal. So I don't care how much I pay for the property.
So look, I agree with you. All right, I'm always buying whenever the opportunities are good enough. I deem it to be a property that I want to own, something I'm going to be proud to own in the future, something I'm going to be able to manage easily, something that's going to provide me with cash flow. I want all of those properties. All right, but I could tell you that there are circumstances where, like in 2008. Okay, so I proudly tell people that I had a pretty nice sized portfolio prior to 2008. I didn't lose a single house, but I'll tell you what I did lose. I lost some rent roll in a commercial
Absolutely,
building.
Yeah.
When I bought Executech, I paid $2,150,000 for the building. It had a $42,000 rent roll per month.
That's unbelievable.
Right,
by
half
the
a
way.
million
That's
dollars a
amazing.
year coming
Yeah.
in, right, when I bought
Yeah.
the building. And I bought the building 2 years prior to that. So when I tell you it had a rent roll of $42,000, it had a consistent, very strong rent roll for first 2 years I owned the property. After in a period of less than a month, we lost, when 2008 crash happened, every mortgage company in our office went out of business. I think we had 3 of them at the time. Multiple real estate companies went out. A title company went out. We lost like 8
Wow.
different tenants in less
Yeah.
than maybe 3 weeks' time. They're just gone, done, all of them, done.
So it's funny because you get a lot of real estate investors who started 2 or 3 years ago. Oh, this is the greatest thing ever. I'm a great real estate investor, and they start teaching it.
Yeah.
They do the YouTube video. I'm like, you're not a real estate investor until you live through something like 2008, and either you survived it. I didn't. I lost everything in 2008, and then I learned how to rebuild it, which is another impressive skill. I mean, I've learned how to rebuild my credit to a point where I have $750,000 available in credit cards, and I teach that concept as well. I bought multiple properties. I bought my first property after bankruptcy with a 420 credit score.
Right. So, I mean, you have to look at it a couple different ways. Like if we're talking about houses, that's a lot easier, okay? Because if I buy a house for $350,000 and the value of that house drops to $275,000, as long as I'm still getting the cash flow from my rent roll, I don't think I care. I don't think I care.
Exactly.
I'll be happy to just hold the house for another decade until it ultimately regains the equity that I once had, or I just know it will anyway, so I'm not really worried about it. But in a commercial piece of real estate, you're at greater risk because keep in mind that the rent roll, I didn't tell you that the rent roll dropped from $42,000 to somewhere around $33,000.
Which is still great for the price you pay for that building, by the way.
Right, but it was $9,000 a month
I got
less
you.
than I was getting.
I got you.
Okay? And believe me, we made changes. We had to make changes. We had to cut things and get rid of some employees and revise the way we were running things to keep our heads afloat because we were concerned that we might lose it. And then once again in 2020, we had 100 people working in our building, and we went down to just 2 guys.
Right.
And we were pretty scared, but guess what? Our tenants are such honorable people that they all kept paying us.
Yeah, and I'll tell you, this is why when people come to the school, they say we're real. Because we tell you really what happens in real life, and we tell you real time.
You can't just go around and pretend like you're so great and everything that you touch is successful, because that's just not reality.
That's exactly right. It's not reality. And we're going to tell you where we failed. We're going to tell you where we succeeded. And if you come to investorschooling.com, you're going to hear stories like this all the time. And you could be, by the way, investorschooling.com, we're national. So if you're listening, you might be listening to us in California on one of our stations that we transmit on. And if you want to come to investorschooling.com and become part of us, you can actually go via Zoom. We have classes via Zoom, and our classes are on Thursday night at 7 o'clock. And if you've never been to a class before, go to investorschooling.com, sign up for this Thursday night, or it's 7 o'clock Eastern time, or 4 o'clock California time, or is that Pacific time?
Yes, I guess so.
Yes.
Yeah, you want to hear some of the places we're broadcasting this show?
Sure, why not?
Well, we're obviously in Philadelphia. We're all over New Jersey. We're in the very hot market of Erie, Pennsylvania. We're in
Erie?
Erie. Oh, that's a major, major market.
Hey, if you're in Erie, Pennsylvania, just call the number right now. I realize that we're not live when you're calling, 855-939-1136. I just want to know if anybody from Erie, Pennsylvania is really listening.
Okay, we're also in Portland, Oregon. We're in San Francisco, on multiple stations in San Francisco area, and growing all the time. So right now, this broadcast that we're making today is being rebroadcasted 96 times in the month.
So, yeah, so Joe on Facebook has a really good question, going back to the trust. He says, does it make sense to transfer owned properties into a trust, or should I only do it with newer purchases? Would you like to answer that, or shall I?
Yeah, I would say that it definitely makes sense. Anytime you can put something in a trust, it's a good decision, whether it's a car or a dog or a boat or a house. I think you should do it, and it doesn't cost hardly anything, less than $100 to do it.
No, it's probably about because of the title company, they'll probably charge you $200-300 just for the transfer of title. But so what?
Yeah, well, that's what I'm thinking. Like about is $100, $80 to $100 maybe.
Right.
I mean, it's not a huge expense.
Right, exactly, and
Right.
It saves you so much. It could save you so much in the long run.
Could. You never know what's going to happen with one of your houses. You never know. You could have a fire. Somebody dies. There could be major things.
And let's talk about something else. This is something that's rarely talked about. We talk about it all the time. But if you have to go into a nursing home, so you're older, you have to go into a nursing home, and you have 3 or 4 properties, you wanted those properties for your kids. You didn't want them to go to the nursing home. And if you have 3 or 4 properties and you're in your name and you have to go into a nursing home, you're gonna have to spend that money on a nursing home, and Medicaid's not going to kick in. But if the property was in a trust, you never owned it, which is the greatest part. You've never owned the property, which means now you can go into a nursing home, Medicaid will pay for it, and your kids can still get the property that you were the trustee on. That's one of my favorite things about trusts.
Well, I do think that's amazing, but I think even more amazing than that is the ability to isolate each and every property from the other properties. So it makes it virtually impossible for somebody to attach everything that you built your life around.
Exactly.
Right?
Why don't you tell the garbage story in Philadelphia?
Yeah, so way it works in Philly is they do something called redundant leaning in Philadelphia, which, in my opinion, probably should be illegal. So what happens is, suppose your tenants are putting the trash cans out on the wrong day, and they're just leaving them out there all week, and the trash is blowing all over the street. You can understand why the city of Philadelphia doesn't want that to happen. So what the city of Philadelphia does is they go and they will send you a fine. It's typically $75 every time they write you up. So they write you up for the $75 fine, and the tenants take the ticket that they got for $75 and they throw it in the trash along with the other stuff. So they don't
And
pay
they put it out on the wrong day too.
And the city of Philadelphia, they do. And the city of Philadelphia will lien your house for the trash fines, which could end up being like $5,000 if this is going on for years and years, right? You, as the landlord, don't even know about it, okay? And then one day when you go to sell your house, you find out that there's a $5,000 lien, not on your property, on every property you've owned.
Yep.
Every property you own at the moment, because they don't care how they get their $5,000. They just want it. So any one of these properties that you sell, they lien it for all of the fines that are on any of your properties. However, if you buy your properties in trust, City of Philadelphia has no idea which properties you own and which ones you don't own.
Exactly. And that is why, another reason why we do it. It's anonymity. I mean, if you look up Phil Falcone or Larry Steinhaus on the MLS, you will find that we own no properties.
One thing that you can do on the MLS, like when I first became a realtor, we were learning how to use the MLS, and one of the first things the teacher taught us was look up Allen Iverson, and you can see the house that he lived in, right? Which was cool to look at the pictures, but what you could also figure out is what he paid for the house and what he sold the house for. Okay, so if he bought a house and sold it and bought a house and sold it, you could actually calculate almost what his net worth was because his salary was public knowledge and his real estate deals were also public knowledge. Pretty weird. And that teaches you that. I think the reason that they were showing us this was to show us that you, if you buy everything in your name, they weren't pushing that. They weren't talking about trust or anything.
Sure.
But it did teach you right away that, geez, somebody could figure out what my net worth is. If I'm worth $10 million, somebody could figure that out rather easily.
You know, I actually did a search on some of the talk show hosts on WPHT, and I know where they all live. So if you guys, get mad at me, I'm going to come to your house.
You mean like if they send us a punishment for saying bad words on the air?
Well, no, not that. I'm talking about, like if Dom Giordano or, says something bad about us or doesn't play our commercial properly, I know where he lives.
Dom would never do that to us.
I know. Dom likes us. Dom likes you a lot, actually. He actually really enjoyed your voice that time you called.
Well, I'm one of his people,
That's true. Yeah, that's
right.
true.
And he goes down the shore, too.
Is he like this?
He sounds like a mafioso shyster.
I'm pretty sure he wouldn't appreciate that.
See, now, but he doesn't know where I live, so he can't come after me.
If he asked me, I would tell him.
That's not fair.
All right. Why don't we, we're at the half-hour mark. Why don't we take a commercial break?
Let's do it. Go to commercial.
Phil Falcone, InvestorSchooling.com. I'm inviting you to a complimentary class in Langhorne this Thursday night at 7 p.m. I will teach you how to buy ugly houses and make them beautiful. As a bonus, we will also teach you stock option investing. So get your butt to this meeting, 7 p.m. this Thursday night, Langhorne, 215-876-3002, InvestorSchooling.com.
Hey everybody, it's Larry Steinhaus from InvestorSchooling.com. You heard my partner Phil Falcone tell you why you should be there this Thursday night to learn about real estate investing and learn about stock options trading. We're telling you right now you will make more money than you've ever made in your entire life if you learn these two skills. Be there this Thursday night at 7 o'clock in our Langhorne headquarters. Go to InvestorSchooling.com. Pull over right now. Take out your phone and go to InvestorSchooling.com. RSVP right now. InvestorSchooling.com. See you Thursday.
Hi, I'm Phil Falcone from Executech Suites. We're an executive suite center in Huntington Valley on Buck Road, 67 Buck Road, Huntington Valley. I'm sure you've driven past it. We're right in between Street Road and County Line Road. We have 47 offices.
All right, Larry, 1 minute to back. $5.95 a month. You're probably wondering, Phil, what do I get for $5.95 a month? Let me tell you. You get an office big enough for one person. You get the furniture in that office. You get the telephone on the desk. You get the telephone numbers. You get the fax numbers. You get 2 full-time receptionists to answer the phone in the name of your company and patch the calls to you. So if your company's ABC Painting Company, hey, ABC Painting Company, how can I help you? Would you like to talk to Bob? Let me get him on the phone. You could be home sleeping on your couch and I'll patch the calls right to you. What else do we give you? We give you the conference rooms. We give you the kitchen. We give you the mailboxes, the printer, the copier, the scanner, UPS service, you name it. All of the utilities, cleaning service, and best of all, we give you free coffee. Get yourself to Executech Suites. Phone number is 215-942-7701. 215-942-7701. ExecutechSuites.com.
All right, you're back.
All right, welcome back to Investor Schooling Live. We are transmitting from Investor Schooling Network, right here in our office at 108 Corporate Drive. That's in Langhorne, Pennsylvania.
Investor Schooling Network?
Is that right? Broadcast Network? Investor Schooling Broadcast Network. That's right.
Ah, boy. I used to call it Investor Schooling Headquarters.
Well, it's now where Investor Schooling Broadcast Network is located inside Investor Schooling headquarters.
Whoa, that sounds really important.
It's very important. Have you looked at our studio? I mean, we've had people tell us our studio looks better than most radio studios. Just ask the producer.
Yes, we have heard that.
And by the way, if you want to call in, 855-939-1137. We will take your call live, 855-939-1137. And if you're listening to a rebroadcast, you can still call that number, 855-939-1137, and we will do our best to answer your question, even if it's not live. And if you want to find out more about Investor Schooling, go to investorschooling.com and sign up for this Thursday night class. I'm telling you, you're going to learn a lot. We've been teaching you a bunch of stuff today on trust, and it's funny we're talking about all these people online. They're talking to us about trust online.
Yes, they are. Hey, why don't we go on to the next topic?
What is it?
How can using the 1031 exchange help you get rich?
Well, I don't know about help you get rich, but I could help you save taxes using the 1031 exchange. So I guess if you're...
You don't think it could help you get rich?
Well, it's what you invest in that will help you get rich. The 1031 exchange will keep you from paying taxes on that investment. So,
all right, well,
technically you're right, but it's just a little extension of that.
Okay, so let's talk about Executech Suites again as an example.
Great example.
Right? So I owned a bunch of houses. I owned row homes. I owned them in Parkwood, Morel, a lot of them in Mayfair. I had done some deals down in the city, but I was mostly in the Northeast Philadelphia area. Most of my properties were in between Frankfurt and Tarsdale, Rawn, and Cottman. So that's the Mayfair area, right? And when I saw this Executech Suites building for sale, I knew right away the building because I had taken my real estate class to become a realtor. I learned it in Executech Suites before I owned the building. And then when it came up for sale, I knew all about the building and what kind of building it was. So I was interested in buying it. And as far as actual cash, I had very little at that time, only about $10,000 in the bank.
So you had $10,000, so you had your name, right?
I had a bunch of assets.
Right, you had the properties.
But actual cash, I had about $10,000. Right. This building was for sale for $2.3 million. I negotiated the price down to $2,150,000, and I bought the property by basically selling a bunch of... So I went home and put a bunch of my properties up for sale, about 8 of them. 4 of them sold rather quickly, and I was the real estate agent on both sides of 2 of them. So I was capturing a lot of the commission as well, right? And I needed to come up with $475,000 in actual cash to buy the property. That's what I needed, according to my bank, who was going to lend me the money for the building. And with a $42,000 a month rent roll, they had no problem financing.
Yeah, sure.
Right? Okay, so the question was, can I come up with the $475,000? I sold 4 of these properties that I had, getting approximately $100,000 from each of the 4 houses, all right? And that gave me $400,000. I was still $65,000 short because I had 10 grand in the bank. And it occurred to me that when you buy a duplex, you get the last month's rent and the security deposit given to you at settlement. That gets transferred to the new owner because the new owner is now the landlord. And it occurred to me that, geez, there's a $42,000 rent roll. Why don't I call the title company and ask them if that money could be transferred to me? He said, of course it will be transferred to you at settlement. And I said, no, can it be transferred to me to use on the settlement sheet? And he said, yeah, same thing.
Absolutely.
I'll do it.
Right.
He said, yes, we can do that. And
In fact, most title companies do that automatically. You don't even have to ask them; they automatically do it.
yeah, I guess so. But at the time, I wasn't sure whether or not
Right. Sure.
they could do that.
It was such a big number. You were like, oh,
Well,
make
right.
sure it's a really big number. I can do that, right?
Right, because it was $60,000 is what it was. It was approximately $60,000. So all of a sudden, here was a guy who didn't have the money. I had $400,000 in 4 separate 1031 exchanges. And then I also got the $10,000 I had in the bank plus the $60,000. I was only $5,000 light, which
great.
I just came up with and made the deal happen.
So real quick. So you keep saying 1031 exchange. Why don't we explain to the
Yeah,
audience what it is?
I intended
Sure.
to.
Okay.
So when you sell a house, for example, I had a house in Parkwood, I had a house in Morel that I sold. When you sell these houses, right, what happens is you sell them to somebody just like you would sell any other house, but you do not take the money. You do not touch a dollar of that money. You could touch some of it if you want to, and put the balance of it with the 1031 exchange attorney. Okay, so what they call an intermediary. So what happens is you sell these 4 buildings. You get $100,000 for each of the 4 buildings. The money goes to an intermediary, a 1031 exchange intermediary. He takes that $400,000, he puts it in an escrow account. Okay, you have to identify the properties you're going to sell and the properties you're going to buy. And then when I needed the $400,000 to buy Executech Suites, the 1031 exchange intermediary would then transfer that money to the title company who was handling the sale of Executech Suites. So bottom line is I never touched the money. If you touch the money, it's now taxable. Okay, if you needed $10,000 or something, you could easily say, oh, out of this $100,000, just put 90 in that 1031, exchange account and give me $10,000 in cash now. But I didn't need any money. I needed every penny of what was available to me. So essentially, here's a really cool way to think about it. The money came from Parkwood to Huntington Valley. The money came from Morel to Huntington Valley. The money came from 2 houses in Philadelphia to Huntington Valley. All that really happened, as far as I'm concerned, is the equity changed addresses.
And that's exactly what the IRS says. It's exactly what happened. The equity changed addresses, and that's why you didn't have to pay taxes on it. Now, if you sell Executech Suites, you have to sell the taxes based on the cost basis. I'm sorry. You're gonna get taxed on the cost basis of Executech Suites to whatever you sell it for.
Right, but I could always do another one.
Exactly right.
So I could always sell Executech Suites one day, maybe pull out $1.5 million, or imagine it was paid off, it would be worth a couple of $1 million, right? And I could take that couple of $1 million and maybe buy something in Florida where I intend to live in the future.
Right. So you maybe you'd buy another executive suite center, maybe you'd buy a hotel, maybe you'd buy whatever.
Whatever I buy.
Now you do know that our new president is trying to eliminate the 1031 exchange.
I remember that you told us that right at the beginning of the Biden presidency, and that's a very hard thing to forget when you're in the real estate business.
However, this is, I mean, whether it happens or not, and I actually believe it won't happen because I believe that the Congress and the Senate will not let it happen because they all own properties and they're going to be cutting off their own feet. So, but assuming it does happen, you have quite a while before, number one, it goes in front of them and before it's voted, and then even if it's voted, there's some time before it takes place. So you have some time to make decisions on your property before it happens.
Now, even if the law did change, okay, and it did pass, it doesn't mean that the next guy couldn't change it back.
No, that's true too. And the other problem, the other one, the big one that I'm really worried about in the tax law change is the step-up basis change. And we talked about this before, where somebody owns a property and they pass away and they leave the property to their children. If they bought the property for $50,000 and the property's worth $500,000 right now, it used to be that the person who inherited now literally has a cost factor of $500,000, and if they sell it for $600,000, they're only paying taxes on the $100,000. Now, it can be argued that that's probably not fair. So let's make it so that the cost basis was the cost basis of the parent. Okay. However, the new law that they're trying to pass is not only is the cost basis of the parent, but the second the parent dies, you have to pay the taxes, which is ridiculous because now you have to sell the asset to pay the taxes. And what's the point of leaving the asset to your child? And by the way, that's another reason to put it in trust because that won't happen.
Yeah, that's a crazy thing, and so there's quite a bit of stuff that could be very worrisome in the future, and stupid to me, because the whole point of these plans, like a 1031 exchange, is to kind of entice the investor to take the money from the building that he's selling and utilize it to go buy more buildings, which is good for the economy, which is good for jobs, which is good for business, which is good for everything. It's all good.
Wait. But that would mean that capitalism might be a good thing.
Yeah. Well, certain parties don't agree with capitalism.
Agreed. But luckily we do. And you know that a socialist will never be able to make it in a capitalistic world, but a capitalist will always make it in a socialist world?
It depends on what kind of rules and laws are being passed in a socialist government. I mean, enough stupid decisions could force me to move to a place like Belize.
You in Belize, man? I keep hearing Belize.
Okay, well, it's just a name for right now. I've
know.
never been to Belize.
You never even been there?
No, I've never been there.
Oh, okay. Well,
I'm planning on going there. I might go there soon.
Take some pictures. I want to see what Belize looks like.
Yeah, me too.
I don't know if Belize is really is real, if it really exists.
Well, I've also heard that Uruguay has a very strong economy.
So you like stuff that's pretty interesting. I like it.
Well, I might, if I'm going to go down there, it might make sense to hit a couple of countries.
Hey, listen, we got Evan on the phone. It's from media. I got a funny feeling I know which Evan this is. What's up, Evan?
What's up, Larry? How you doing?
It is who I think it is, right?
It sure is.
So
Evan Zaremba.
This is Evan Zaremba. This is one of our student liaisons who's an incredible coach, by the way, one of our coaches. So what's going on, Evan?
So I have a question. So I heard you guys talking about trusts.
Uh-huh.
And one of the things that people have, especially parents, have an issue with, older parents, is relinquishing their assets before they pass away. They don't want to. I've heard this plenty of times, and you guys probably have too, where they don't want to sign over their house to their kids. They think their kids are going to kick them out, and it has probably happened before. When you're 90-something years old, you don't want to have that feeling of, my kid's going to kick me out and be a shithead. Sorry if I cursed. But if my question is, when you put something in a trust, and you're the beneficiary of it, can you put in your will that a death trigger, that when you die, the beneficiary becomes now your kid or whoever you want it to be, so that you don't have to worry about them trying to benefit from your estate prior to your death?
So two things. One is be careful you're on the radio in case you didn't notice what you said. The other one is
right. Sorry about that.
Just be careful. So there's a really cool trick that I do, which is if you have the beneficiary of your trust, your LLC, have the owner of the LLC your children, and you're the managing member of the LLC. So now what happens is you're the managing member of the LLC. They have zero control of this LLC. They have to file a K-1, but there's no money going in the LLC because the LLC is just the beneficiary of the trust. All the money's going through the trust, and the trustee, what I do, the trustee my trust says that the trustee is responsible for all the taxes that he gets, and he gets all the money that comes in. So what we do is that way the LLC is now owned by the kids. So now if I die, the LLC is owned by the children, and it's almost like the properties flow into the LLC, but they don't really. Now, the person who's in charge of the LLC, or the one that I designate as the one in charge, If I'm gone, if I'm the managing member, I say, okay, I'm going to designate my oldest son as the managing member. He now either appoints himself as trustee of the trust, or he assigns someone else as trustee of the trust. It doesn't really matter. So now the properties never even transfer title, and the kids now have them, and they can do whatever they want with them. And it's the simplest and best way to do it without any tax consequences whatsoever. It's kind of a neat little trick.
And can't you also have a successor trustee written right into the trust?
Absolutely.
So you pass away, somebody else takes it over. Like, for example, your wife might take it over as the trustee.
Exactly, right.
And then upon her passing, it would then go to the direction of the will.
Right. And what's really neat about this, too, is even if you don't do that, so let's say I don't make the kids the members of the LLC because I forgot or I didn't get around to it or whatever the situation is, and I am married, any assets that I own, including the LLC, go to my wife. Mm-hmm. So now she can make those decisions on what to do with it as well. And if she passes away, if we pass away together, the kids now get it anyway automatically.
Right.
Now they have to work a little bit. They have to work a little bit harder to do it to solve the problem, but they can solve the problem. Did that answer your question, Evan?
Yeah, I think so. So basically, you have in your operating agreement, if you pass away, then a new managing member takes over.
Exactly. That's exactly right. All right, man. We're gonna see you tomorrow, and anybody wants to come in and see Evan, and he's like one of the greatest wholesalers you've ever met. But we're gonna have to go into the stock option sultan soon, aren't we?
Pretty soon.
Do we want to do a commercial first?
We just came out of a commercial.
We did? Okay.
We usually only do one at the half hour.
Well, we can just do one. That's fine.
Okay, you want to do another one? Go ahead.
No, I don't want to do a commercial.
Whatever makes you happy.
I'm just going to tell people that they can go to investorschooling.com. Go to investorschooling.com. Take out your phone right now. RSVP right now. Go to investorschooling.com. Okay, the commercial's done. You want to do one of yours for Executech real quick?
No.
That was quick.
Why not just run a commercial if you want to?
Because you don't want to run a commercial. So if you don't want to run a commercial, we're not going to run a commercial.
Okay.
Investorschooling.com. RSVP right now.
What do you want to talk about?
All right, let's go into whatever you want to talk about next.
How about the entrepreneurial mindset? Want to talk about that a little bit?
Sure.
Okay, so one of the things that we do here at Investor Schooling is obviously we're entrepreneurial. And we kind of are, some people need to be taught about the entrepreneurial mindset because they never were entrepreneurs. They came here because they want to learn about real estate investing. They came here because they want to learn about stock options. They want to make more money. They want to learn about financial literacy and all the amazing things that we teach here, like using, IRAs to build wealth and things of that nature. So a lot of people come here for that reason, but they've never been entrepreneurs. So one of the things is we talk to them about some of the traits that entrepreneurs have. So here's a couple of them. We'll just talk about it. Entrepreneurs naturally do everything they can to get around all the rules and laws that block them from doing what it is that they want to do.
Not get around, because I think that's a bad way to put it.
Really?
Learn how to legally maneuver through them. And I know that's what you're trying to say, but I just want to make sure that people don't think that we're teaching you to break the law. We're not. We're teaching you how to use the law and actually use what's built into the law to your advantage.
But those things are, okay. So that's all part of the common knowledge of an entrepreneur. Because over the years, you just learn that that's what people do. That's what we have to do.
That's why you're moving to Belize, to hide money from the IRS.
No, I'm looking to move to Belize for different reasons.
You got $20 million in a offshore account in Belize, don't you?
Shh. Okay, how about outside-the-box thinking? Most entrepreneurs definitely have a lot of outside-the-box ideas. They're always looking for something different that the normal person probably won't think about. Okay? One of the things that makes me laugh to this day is, suppose I put up a house that's for sale, like a short sale, for example, right? And I'll put up a house pretty cheap, and agents will call me and they'll say, I have a buyer who's very interested in that investment property. It just amazes me. You're a professional realtor. Did it not occur to you to just buy it for yourself? Unbelievable. Okay. So we definitely
I find that fascinating too, that they don't how could they not understand that?
It's incredibly hilarious.
I mean, you put up a house recently for about